Thank you, John. You mentioned President Reagan, and one of the most interesting interviews that I had was with President Reagan, and at that time I remember the discussion we had. One of the things that we were talking about was the tremendous power that the Trilateral Commission and the Council for Foreign Relations have in influencing what goes on in government. And even at that time, they had an espoused view of creating a global currency and what they called New World Order. Ironically, after the G20 meeting, the Financial Times heralded that the discussions were so wonderful because, headlines, they created a new world order. So my question is, what do you all think practically is going to happen? Jim Sinclair says that China already wants a super sovereign reserve currency to replace the dollar, and it's supposed to be a critical part of central banks' reserves. Do you all think that that's the direction we're going? And if not, what do you think is going to happen?
I will simply say that the Fed could use some competition. And if it comes from the Chinese communists of all people, that may not be the worst thing in the world. By the way, I think that we are on the verge of having finally a real debate about the Fed, because it has been one of the most secretive and least transparent of organizations. Ron Paul's bill to audit the Fed now has a majority of members of Congress in the House behind it. And as much as I don't want the Chinese running a separate reserve currency, the threat of the Chinese setting up such a thing may actually force members of Congress to ask more probing questions, as Congressman Paul has been wont to do, and question its role. Because if the Fed, through its incompetence and through its bungling, manages to lose the status of the dollar being the major reserve currency in the world, there should be some accountability, and even obtuse members of Congress may demand that.
But yes, go ahead, respond.
If this were 1985 and we were discussing the future of the Soviet Union...
Can you move the mic closer?
Oh, it's not... It's on? Oh, sorry. If this were 1985 and we were discussing the future of the Soviet Union, I would hope that John Fund or others might say, you know, Ronald Reagan has suggested that maybe the Soviet Union should come to an end. No, what will happen? Well, nobody would have suggested that it was going to just collapse. It was going to implode. John Fund, if someone were to ask him, well, what are we going to replace those systems with? How are we going to replace, what are we going to do with collectivized agriculture? I believe in unicorns, but after all, what is the market going to do? Well, the nature of the market is a certain amount of entrepreneurial discovery. However, there is an enormous body of literature on the free market in banking. He just mentioned Ron Paul. Ron Paul has written about this, about competitive banking. It's not rocket science. There's a great deal of insight about what the free market in banking will do. So the question about where are we going? Well, the more we try to understand the spirit of Ronald Reagan, who thought the solution is for the Soviet Union to unravel, for the Berlin Wall to come down, the more we will appreciate the idea that maybe the solution is to abolish the Fed and then understand a little bit more about the nature of free market so we can appreciate how a free market in banking will work, about which there is a vast and very well-informed literature.
I can't, as someone who covered Ronald Reagan throughout his presidency, I must remind you that the Soviet Union collapsed to the surprise of everyone almost in this room. Oh, yeah. It could have happened in an entirely different way with many casualties and much destruction. So while Ronald Reagan wanted the Soviet Union to disappear, he also recognized that it had to be done in such a way that there could be the least possible casualties.
Quite right. Let's do that with the Fed.
And I think it's incumbent upon you not just to say the market will provide, but to provide us with a roadmap, a GPS system, by which you will trace how we can get from here to there with the least possible damage. You have not done so. You have not carried the burden of proof, and therefore your position fails. It is not enough to say abolish the Fed. You have to say how, and you have to say with such ability that you will not increase market insecurity, and you will not create economic conditions in the short term that will make it even harder for us to return to economic growth.
Tom?
Well, I think part of... Wait, is this working?
Grab
I've got no mic.
Gene's mic.
How about this one still? No? Wow. All right, Gene.
Okay.
Some kind of racket with the microphones going on here. I'm sure there's a natural explanation.
It's the Fed.
Yeah,
Government
right.
control.
I think the reason we probably didn't get into a blueprint is that, I mean, as it is, I could barely get 5 minutes in, but I've actually got right on my blog right now, tomwoods.com, there's a blog entry called How to Return to Gold. And it links to the most important free market economists who have looked at this subject. So Murray Rothbard's book, The Mystery of Banking, which is out in a very nice second edition in 2008, explains exactly what he would do. Now, his plan involves, in part, requiring the Fed to disgorge its gold holdings and then distribute those gold holdings to the commercial banks in proportion to the dollars that they have, and then redefine the dollar's value such that it could absorb the gold and vice versa. There have been, shall we say, adjustments to that since, but that's Rothbard. Henry Hazlitt, who wrote Economics in One Lesson, from which many of us learned economics, I linked to him as well. I think probably the best person to go to, though, is a Spanish economist, I think one of the best economists in the world, who has a treatise that if people read it, would revolutionize the world, and it's called Money, Bank Credit, and Economic Cycles, and the author is Jesus Huerta de Soto. And it is a brilliant treatise, and the last chapter is nearly 100 pages in which he explains how a free market system in banking with no government special privileges, no special sugar daddy, but where banking operates according to the same rules as the shellfish industry or anything else and gets no special privileges, how exactly that would work.
I understand that...
Before you go to another question?
Go ahead, Warren.
I certainly support greater accountability and transparency of the Fed. And,
Can you hold the mic a little closer?
And therefore, probably Ron Paul's legislation. I haven't read it, but from what I hear of it, I would support it. Your question was about a world currency. Gold was the last world currency that we had. It had many virtues, worked well for quite a long period of time, but was overly rigid, and as a result of that, ultimately collapsed. Any enduring system and the goal of a world currency, I think, is worthy, needs to be pragmatic if it's going to survive. What the governor of the People's Bank of China was proposing and referring to was the special drawing right, the SDR, of the International Monetary Fund. And I think that's back into the debate and deserves some serious consideration as not as a replacement, but as a competitor with the dollar and with the euro, which are the two primary reserve currencies in the world today.
Well, wasn't that dishonesty, though, that we went off the gold standard? That's just a political decision.
I suppose I'm the one who's supposed to answer that. I think it was dishonest to abrogate the gold clause and thereby null and void contracts that people had entered into. That's a different proposition from going off the gold standard as the basis or as the peg to which the dollar is fixed. And that's a long, complicated topic that you're not going to give me the time for.
From what I understand, and correct me if I'm wrong, isn't it being proposed that just the opposite of the Fed having less powers, that the government is proposing that the Fed will have the authority to bypass Congress and bail out virtually any entity that deems to pose a systemic risk? And I understand that there are like 500 banks that are on the list that are allegedly too big to fail. Somebody want to comment on that?
Well, the basic theme involved there is starts with perhaps reading a brief essay that Alan Greenspan wrote when he was 40 years old, when he was a Randian, called Gold and Economic Freedom. The world went off the gold standard because of the rise of statism, the rise of the welfare warfare state. And the economists, unfortunately, were behind that. The trajectory of Greenspan's career is really the whole story. He caught Potomac fever at the age of 48, and he himself became a statist. It's great fun running the Federal Reserve. The Federal Reserve gives the economists a seat at the tables of power. They don't have to be just economists and journalists. They can actually call the shots. It's very heady. It's very invigorating. But beyond that, what is happening right now politically? The Obama administration, Obamonomics, is basically stealing the country from the American people, and it's doing it through the printing of money. Deficits don't matter. Of course, that's what Dick Cheney said, and Dick Cheney was a part of that same problem. Deficits don't matter. We can print the money. We don't have to ask the people to pay for it in taxes. We can simply print it, impose it on them, arrogate the resources to ourselves, and then we don't have to worry. That's the nature of why this is all about politics. And indeed, Alan Greenspan wrote about that very, very succinctly in Gold and Economic Freedom. That's what it's all about.
Gene and I agree on many of the things that may happen in the next couple of years, which would mean vastly increased inflation, by traditional standards, and of course the devaluation of the dollar and other financial problems. That will trigger, I hope, a robust debate about the mistakes that got us here and how to get out of them. Part of that debate should include what my worthy opponents are proposing, but we also need another proposal. We need a proposal for people who are not going to buy that package, and we need a proposal for a slimmed-down, streamlined Fed along the New Zealand model, and other countries, by the way, have adopted it since then. And I'm not saying it's politically easy, but it's certainly more politically easy than what they're proposing, and it has worked.
Tom?
Okay, but if we want to talk here about what's right and what's wrong, what's the best outcome we can aim at, then it seems to me that this solution whereby we should have just a nicer Fed that isn't going to do as crazy things, I mean, this is like, should I have a door with a lock on it, or should I have a door that has a piece of paper that says this door is locked? I mean, why would I support that? But beyond that, it seems to me there is no moral or economic reason to have this money monopoly system. And I think people who favor a system like this, that, as I showed in my remarks, actually does harm people, and I actually believe causes far, far worse financial problems than any other system. I think we need to, it shouldn't be the people who favor a free market who have to be on the defensive. It should be people who support this monopoly system. Now, F.A. Hayek, who won the Nobel Prize in 1974, in the late 70s began to argue that there is no reason, if you want to be a non-utopian, to believe, to expect governments to give you good money, especially governments with the ambitions of the United States. You have no reason other than mere superstition to believe this. And he says, historically, it is a mere accident that governments have been in charge of the money monopoly. And why do you think that is? Because they're just looking out for the common good. They just want to give us a good medium of exchange we can use for our transactions. Of course not, because they want to be close to the source of the production of money. It seems to me if we believe in the free market, then all this Rube Goldberg nonsense about special drawing rights is utterly superfluous. What is to prevent the free market from producing money the same way it produces any other good? Money is a good. What's the problem here?
Warren?
There is no problem with market-provided money, and most of the money that any of us use is privately produced in the private sector. What the government has a monopoly on, and what a monopoly is needed for, or at least highly helpful, is the unit of account. All of the private monies, your Visa credit card and debit card and mobile phone payments, which are very popular in Kenya and other African countries, all kinds of ways of paying things, not just the old-fashioned check, which is also privately produced by banks, all have their value denominated in a monopoly unit of account, the U.S. dollar. We cannot easily give that up. You mentioned too big to fail and a list of 500 banks. That's a fiction. There is no list of banks that are too big to fail, and it's certainly nothing like 500. But I think giving the Fed, I very much agree with John's points, giving the Fed added powers to deal with systemically important, too big to fail institutions would be a very big mistake. We certainly need more transparency and information about what non-bank financial institutions are actually doing. The AIG debacle was a big surprise to everyone, but I favor, as John does, stripping the Fed of its supervisory powers, sharply narrowing its focus on monetary policy, preserving the value and integrity of that unit of account. And again, virtually all money is privately produced, so let's not raise fictions here.
Let me pose
May I just speak to Warren's point about the unit of account? Look, Warren, a brief economics lesson. The market prefers a single unit of account. There are very, very powerful market forces that produce it. In fact, its government, with its many currencies, the yen, the shekel, the dollar, the Canuck, all of those various competing units of account are bad for the economic system. And indeed, world traders only use one unit of account because those are market forces. They tend to use whatever's at hand. They tend to use the dollar. So indeed, I only suggest to you that you go on my colleague's reading list and try to understand that the single unit of account is the one thing that happens when a gold standard happens. Everybody wants gold. The world wants gold. There would be a single unit of account globally.
Just one tiny, I promise, two-sentence point. Also, I think it's misleading to say that, the money is all privately produced. This is like a great private system. Yes, with a gigantic monopoly privilege of legal tender. So, of course, obviously, people are going to accept this. The type of system we have now of fiat paper money being that is convertible into nothing has never in history emerged spontaneously as the result of people rationally observing the good consequences it has. To the contrary, it has always been imposed by violence and through monopoly force and through the police prohibiting alternatives. So why don't we let people, instead of using other things, let them use gold and silver and take the privileges off of the dollar?
I'd like to pose a
quickie. There's no prohibition on gold or silver. Anyone can own it. You can transact in it to your heart's content. But the market has revealed its preference not to make gold the center of the system. I'm not trying to say something against gold. I'm just talking about the market's revealed preference, which is for the U.S. dollar, not for gold.
I'd like
to pose. What if we had them all on a level playing field for a change, and people could make voluntary choices, and they could actually make contracts, and they could require payment in something other than the dollar? That's the problem. The reason we can't have genuine competing currencies is that everyone's required by law that they've got to accept the crummy greenback.
Not true.
It's not true.
Well, I have to add in that one of the other things that President Reagan said to me was that he believed that individuals should make their own contracts in gold if they want to protect themselves. And he acknowledged that there was no country that ever survived when they dropped the metallic backing, although he stopped short of saying that we needed to go back on a gold standard.
And people make such contracts today.
Right.
But it's got to be, look, guys, the simple confusion is it's got to be two kinds. You and I can contract in onions if we want to. We can contract in apples. But there are legal tender laws that require, if there's a contract that's going to hold up in the courts, it's got to be paid in legal tender. Therefore, only if two parties to the contract agree to it can it survive. That's why it's not a level playing field, the legal tender laws. It's a simple enough point.
And the taxes on gold and silver, too.
Yeah, that's right. All right. We're running out of time. I'd like to pose one very practical question. We've been talking about theory, but what has happened is that the entire global financial system has melted down, and virtually every asset has been plundered. And as a result, we've had a deflation in terms of, if you would define it as far as falling prices. And over the years, of course, there's been a debate, even prior to this meltdown, that we might reach the point where the Federal Reserve would be pushing on a string so that no matter how much credit they wanted to create in the economy, it just didn't happen. So obviously, to this point, that's what we're experiencing. Now, the question is, Bert Doman points out, and a number of deflationists say that, okay, so let's say hypothetically the Fed's expanded up to 11, 12 trillion, whatever, just a trillion here or there, but conversely, there's been 50 trillion that has just vaporized globally, that's just gone to money heaven. And so he thinks that in spite of the inflation in terms of monetary expansion that the Fed's going to do, that we're not going to get out of this and that the dollar is not going to go into hyperinflation. So I guess what I'm really asking is a timing issue, but that affects all of us as investors. And so I was wondering if you all would comment, do you think that deflation is going to continue for a long period of time and then convert to hyperinflation, or what? Where are we stand in this cycle?
Well, I think one fundamental confusion that should be cleared up is that the basic process that we're talking about is a process whereby the government finances its operations not through taxes, not through legitimate borrowing, which would be very limited, by the way, if it ultimately had to be paid for by taxes, but through the printing of money. That's what's happening now. Now, the secondary effects of the printing of money are what the question addresses. But the fundamental problem is that that power is slipping from our hands even more than ever because of the ability of the government to finance these huge deficits, and the huge deficits, by the way, that elder care is going to charge us through the printing of money. The secondary effects are somewhat debatable. I personally believe that price inflation, which is what the mainstream normally confuses with inflation, is not going to occur in the next 2-3 years because we have such slack resources. We have such a high unemployment rate. It's almost never occurred that that you could have that kind of acceleration of inflation with those kinds of slack resources. So very possibly we will not have severe price inflation. We will, however, have the other fundamental insidious evil of government deficits, looming government deficits, financed increasingly through the printing of money as the Obama administration decides to spend money on whatever it wants to and arrogate human resources in whatever way it wants to.
Yes, Warren.
I'm sure Gene is a better forecaster than I am, so I won't. I'm going to make a different comment than your question. A big confusion that we've heard up here is that the Fed determines interest rates. Completely false. The market determines the interest rates. The interest rates we see are market determined. The Fed uses the federal funds rate, overnight interest rates, as a mechanism for doing what it does do, which is control the money supply. That's the way it gauges how much money it's going to put into the system. So don't think that the Fed determines interest rates, nor that they determined interest rates even during the criticized period of 2002-2004. Markets determined those interest rates. There was a global glut of savings in the world. Much of it flooded into the United States and kept interest rates very low.
Tom?
All right. Well, on the global savings glut, I'll leave to Gene. But in terms of the market setting interest rates, well, we're not saying that the Fed goes to a local bank and says you should charge X% on this loan. I mean, we're not making a trivial claim like that. We're instead saying that when the Fed increases the money supply through the banking system, the banks now have more to lend. And so something's got to give here. If they're going to lend it, they're either going to have to lower their lending standards or they're going to have to lower the interest rate at which it's offered. So indirectly, the Fed does determine interest rate.
Well, and not just that's the key point, that it does it through the expansion of the money supply, but that's also the reason why I offered to Warren the simple anecdote of what truly happened over the last several years as the bubble was happening. The Federal Reserve set the overnight interest rate at 1%. That's impossible for a market to ever believe in because it was beneath the rate of inflation. That would not be a market-determined interest rate. That interest rate was moving the one-year rate, and the one-year rate was setting the very, very low adjustable rate mortgage rate. So in that sense, sometimes it does control interest rates at the short end of the yield curve, but more importantly, as my colleague pointed out, it basically affects interest rates all along the yield curve because of its ability to expand the money supply, because those loanable funds weigh on the interest rate.
All right,
To sum up, I would simply say my colleague Steve Moore at the Wall Street Journal reports that his source of the Treasury Department says they're printing money 24/7. literally 24 hours a day they're printing money. So somewhere we're going to see that show up in the economy. That will give you an opportunity to have a great debate about the Fed's role and its mistakes. You should have two plans when that debate happens. Plan A is what you may really want, and Plan B is what you can get. And it's prudent and rational for all of you to want your Plan A if you wish it, but to also have a Plan B in your hip pocket. And we've tried to provide both for you today.
Well, the timer has been flashing, indicating that our time is up. So I'd like to thank our panel very much for participating, and I think it's been a very informative and lively debate. Thank you very much.